Good morning, guys. The COT data video for the week beginning the 25th of November 2024. Now, I thought what we might do is look at the bubbles alongside the COT data. So, if you're not familiar with the bubbles, if a bubble's high up, it tells us that the retail participants, they're long, so we should be looking for sells. And if they're short, we should be looking for buys. Now, they're long the euro, they're long New Zealand dollar, and they're long yen. Pretty much 50-50 on the pound. They're short gold, they're short Swiss franc, they're short CAD, and they're short the dollar. So sentimentally speaking, we should be looking for buys, we should be looking for sells, and probably avoid pound because we just basically sat on the fence. We're on the 50%. Right, dead on the 50%. Okay, so we'll look at this and then in correlation to the COT data. So we can see that the euro FX is selling off, which makes sense because it's a sell. So that's fine. It actually had a big reduction. The dollar is negative, but you'll note that it's not going into a free fall mode like the euro. Lots of reasons for the euro to fall. There's a fear of stagflation in Germany. You've got the tariffs from the Trump presidency. The auto exports from Germany are going to be hit by the tariffs. Lots of fundamental reasons for a weak euro. Okay, so that's selling there. We're actually minus 42,000. Okay, we'll look at the yen. Now the yen, we should be looking for sells. We are quite close to 50%. Likewise, be careful with gold as well. So we're sort of in this area. We've got to be a bit careful with yen and gold. Okay, let's look at yen. And we'll see how we go. So we just come off that low slightly, minus 64 to minus 46. So we're still negative, but less negative. So a little bit of caution with yen, I think. So we'll take euro off, put on Aussie. We can see that where are we with Aussie? Oh, it's hidden behind gold. Yeah. So we're quite close to 50%. Okay, so Aussie we can look at. Okay, so we've gone slightly higher. Yeah, we basically increased by 2,000 contracts, so fairly bullish. And we're on this side of the 50%, so we are buy. Okay, and you may have seen like the euro Aussie, for example. If you've been checking that price, it really fell on Friday. And the logic for that is that euro is a sell. Aussie is a buy, but we do need to be careful around this area because they could gravitate into the sell section. This is the sell section, this is the buy. Okay, it's possible it may gravitate over here, but the COT data is saying buy, and also we've got the bubbles reflecting that as well. Not a massive increase from the week prior, but it's an increase, so that's that. Aussie off. Pound, we've got to be careful because we know where the bubble is. Okay, and slightly more negative. I mean, we are positive because we're above the zero, but we're more negative than the week prior. 56,000 to 40,000. So it looks like we may sort of slowly decline. It will help if the bubble comes up over here, and that will tell us that they're long and they've added long. If they do that, then they're going to get punished by the banks, and then we'll probably see that come down. Okay, so what will hopefully happen is that the banks are watching the retail sentiment, watching what they do, and then they're going to get punished. Okay, so I think what might happen, if that bubble comes up over here, I reckon we're going to see a decline on this. Remember, this data is from Tuesday. There is a delay in the COT data, but it is what it is. It's as best as we can get. Okay, but I think that might happen, but we'll just have to wait and see. All right. Pound off. I'm sort of leaning bearish on the pound because the fundamentals and stuff. So I'm sort of leaning towards a sort of bearish bias on the pound at the moment, but we'll have to wait and see. Now CAD was very heavy and was still very heavy, but it has stopped its massive free fall. 183. Minus 167 to 183, but you can see we just sort of slowly stopped its free fall. And CAD, interesting enough, it's a buy. So there's a a disconnect between the retail sentiment and what we're seeing in the COT data. The COT data saying, it's heavy, it's quite ugly. However, the CAD bubbles signaling buy. So there's a discrepancy between the retail sentiment and the COT data. So which one would you follow? It's up to you and your style of trading. If you're a swing trader, the COT data is probably better. If you're day trading, the bubbles are really good. Okay, so it may be that this is going to tick higher, and if it does, then it will agree with the bubble. Okay, and they're very short the dollar as well. They've been short the dollar for ages and ages, and they've been long the euro for a long time as well. Gold is of note because we know it's on the buy, but we're fairly close to 50%. 236, 234, so a very slight decrease of longs. Okay, still very bullish, but I do note that they're just taking maybe a little bit of profit. Potentially, this was a bit of profit taking. It's worth noting that the herd had sold and they got royally punished. They'd actually got squeezed by about $700 on the gold price. So that was a huge move from the retail selling. Now, my worry was that they're going to be starting to buy, but we can see they're still net short. So we might be okay. This might just be doing that. We might go higher. So it will kind of depend on the retail sentiment. I'm a firm believer that this is setting a precedent for price action, okay? Because retail guys are a huge amount of liquidity. They're very counter trend, and also they can be a good source of liquidity, and also to offset slippage as well, because the banks have got humongous sizes, and if they squish the retail guys first, then they can take a little bit of liquidity out, and it will offset the pain of the slippage of their positions. So I'm a firm believer that the retail sentiment it's like a leading indicator, and what happens here, if they go one way, they'll get punished. Okay, and the banks will absorb their liquidity in stops. So we have to remember the bubbles is that if a bubble comes over here to extremes, we've hit the threshold of their stops. So if a bubble comes over here to the very extreme, we can see a reversal, and if a bubble comes up here, we'll see a reversal, because we've only got finite funds, we've only got X amount in our accounts. The banks have got vast amounts of capital, a billion-fold more than you and I. they're so well capitalized that they can afford this drawdown, and what we can't. If we go one way and we're going to get squished by $700 or 700 pips or 1,000 pips, we can't sustain that, and then we have to close our accounts. So what happens with that? We'll see liquidation and reversal. So this is what we're doing on a daily basis. We're basically checking a bubble on extreme, and then against this other extreme, and then we're trading that the following day, and it's been proven to be quite good. Okay, so a little bit of information there. We've got to be careful at extremes on the bubbles, right? And this would have hit the extremes of the shorts on gold for sure, because no one could handle that kind of drawdown, even on a micro lot. On a 0.01 size, a $700 move in gold, that would collapse normal accounts. Even on a micro lot, you just couldn't survive that. Okay, so be careful. And it's really going up to punish the herd as well. All right, so this is why the bubbles are important. Gold off. And then New Zealand dollar. I've got a feeling this is going to be sideways. We sort of ticked a bit lower. It's interesting. We're still range bound. And how are we looking there? We are a sell on the New Zealand dollar. Okay, and that coincides what we're seeing. A slight decrease, but we're just range bound. And I've got a feeling that the Swiss franc is also going to be the same. Swiss is buy. Okay, so let's look at that. And I thought we might do. We're just basically trapped within that low and that high. We just really consolidated. We'll see a breakout eventually, and which way it will go, the bubble will help. It will help decide the direction. So because they're short, if they add short, it's going to make it more of a buy. and then really we may see a tick up on the Swiss franc, and we might even break this range. So we should be looking for a strong Swiss, okay, and we should be looking for weak euro, and lots of like negative fundamentals with the euro at the moment. So we've got to be careful. And if we do get a trade set up, you know, a max liquidization trade that involves the euro, we must be careful because the fundamentals are strong. Okay, so we've got to remember, like, it's not just the sentiment but the fundamentals as well. So if we have something that says euro buy, we have to be careful because really fundamentally it's quite horrible right now. So that's how the bubbles are orientated. We'll have to see how we go. Remember, if they come up here, it's a strong sell. If they come down here, it's a strong buy. The reason for it is that they're short, and they add short, it's going to be a buy, a strong buy. If they're long and they add long, it will be a strong sell. So that's how you use it. You sell up here, you buy down here, but be careful with extremes, right? Because if we hit extremes, their stops are going to get raided, and then we'll see a reversal, okay? And it's basically just tells us that it's a machine that it's an efficient machine that liquidizes capital, and that's what it is. And unfortunately, the retail guys are feeding the machine with their terrible risk management, and it will just be ongoing forever. All right, so you've got to remember to know your exits. If you don't, then you're going to get chewed up by the machine. All right, and that's it. So if you want to join us, we've got a 14-day free trial. We've also got a 50% off an annual plan, which is ongoing till Christmas. So you've got like a month to go if you want to join us at a 50% discount. So it's up to you. And I wish you a good weekend. Remember to trade safely and also know your exits as well. Use the bubbles. And if you've got any questions about the bubbles, let me know. All right, so I'll speak to you guys soon.